Tip number 182 from the book 501 Contractor Tips. This is on contractor bonds. I don't know if your state requires you to have a bond, but if your state does, then you will need to purchase a bond, and they can be purchased relatively cheap. By that I say, I believe they're between $150 and $200. I think I was paying about $170 for every 2 years for a bond in the state of California for about a $10,000 bond. I believe the bonds have increased. The state of California wants at least $12,500. I'm pretty sure for a bond in 2014 it might be more. I should have looked more closely at my renewal. I just renewed my contractor's license. So I've had my contractor's license since 1986. So that's going to be 2 more years. I'm going to have 30 years as a general contractor in there. I don't know if that means anything, but hey, 30 years as a general contractor might impress some people. So if you're easily impressed by stuff like that, perfect. What's wrong with my eye here? Okay, anyway, back to this. The contractor's bond, it is my understanding that the money needs to be paid back. If you do end up using it and the bond company comes after you, you might want to do a little more research on that. And you can self-bond yourself. I don't know what the process is, but you can actually put the money in a secured bank account, an account that cannot be touched, and then you wouldn't need to purchase a bond. But if for $160, $200, this might not be something that most people are going to be interested in. Shop around for the best prices, and I do have to say this, in the state of California, I remember shopping around and it was like one company owned all of the other companies. So don't be surprised if there is a little heavy-handedness in, you think you're going to another place, but it's the same company. But I do have to say this, I actually got a cheaper policy from the same company. So they sent me my renewal bond with the contractor's license renewal, and I called a couple different companies and found out that the company I think I saved about $30 for a 2-year bond, and it was the same company. So they own the other company. A bond is basically something that is there to protect the homeowner. It doesn't give them much protection. If you have a $10,000 bond, this just means that if the homeowner or your client, property owner, let's just say that the contractor leaves, the property owner, whoever signed the contract, can actually contact the bond company and get up to that amount to finish the job. So if you only need about $5,000 to finish the job, then the bonding company is going to give you the $5,000. And I don't know if they find a contractor to help you finish the job. I really don't know what's involved in there. Never had to use my bond, and hopefully you never have to either. And again, the reason why is, don't be fooled by some of these things. If you have an insurance policy, and the insurance policy is going to give you this much money, or you might think that they're going to give you this much money, a bond isn't the same thing. So just keep that in mind. And like I said, I don't know all the ifs, ands, or buts about a bond, but I do know what they do and what is required by some states. And you need to find out also. I mean, it really is tough. You start a business, and you get your contractor's license, and then you find out before you get your contractor's license, you got to pay another $200 or $300. This is tough. And then you go get liability insurance. That's another $2,000 or $3,000. I mean, it isn't easy. Get as much information as you possibly can about everything, including bonds, if they are required by your state. Understand how they work and what's required of you and the bonding company if something ever happens.